Hello active traders, and welcome to our Trading Week Ahead broadcast. This is Ken Calhoun coming at you live here on September 24th, 2016. It's great to see you here. The markets have bounced a little bit this last week. We're going to look at some very specific step-by-step trading strategies and some of the charts that you can use to follow the market in our upcoming week ahead. So great to see all of you here. We're up to, wow, look at that. We're 4145 registered. So I want to say thanks to all of you for making us the #1 ongoing webinar series in the entire trading industry. So you guys are amazing. I appreciate your enthusiasm and your involvement. Let's see what's worth trading in 20 quick minutes. As always, first, all information is for educational or information use only. I'm not making advice about what to buy, sell, or hold. No profitability nor performance claims are being made, and by watching this you agree not to make actual trades. Our quote of the week comes from Helen Keller with a very thoughtful sentiment about walking with a friend in the dark is better than walking alone in the light. It's better to go with somebody even if you're struggling and stumbling and 2 steps forward or 1 step back. Trading can often feel like that, right? You get into a breakout, does a false breakout, you take a stop, you try again, and that time you make money, and that's good. And the next time it's a scratch trade, but overall you're making progress. And so that's what I'm trying to accomplish here with all of you. You may have seen me in this month's issue of Stocks and Commodities with a featured article on Bollinger Band moving average crossover breakouts. You may have seen me in my live Las Vegas seminars. It's great to see big turnouts. Or at the Money Show Traders Expos. It's certainly good to see a big turnout for those as well. So our trend bias for this upcoming week ahead is as follows. Slight long bias, kind of choppy like y'all had mentioned. Slight long bias in the S&P because we have a slight uptrend continuation. Overall, they were selling oil relatively strongly lately, the last couple of sessions, and gold is a slight uptick. So we're going to take a look at those charts coming up right now and see where things are headed. Before we do that, here's a quick outline of the Trading the Open live week alerts from last week. We ran the room Tuesday, Wednesday, Thursday, and Friday, and you can see the tickers. Green highlights are our winning alerts. Reds, we had a few stops, speed bumps, and gray charts are some of the break-evens. But anyway, these are the type of charts that you may want to follow for the upcoming week ahead. Big major announcement by popular demand as a result from the survey results. We had over 250 of you worldwide who had written into the survey, and I thank all of you for doing that. There is apparently enough interest in the under $20 cheap stocks to add that to the live Trading the Open room experience. So we are now expanding the focus of Trading the Open to include under $20 charts like Tech Resources. We nailed it out of the park yesterday to 17.4 long. Other charts, even in the under $10 category, are now being added permanently to the Trading the Open live room experience. So if you're not yet a member, you can join now for just $27 for a 2-week trial. Let me get you the link to that. If you're not yet a member, if you are a member, you know how good my alerts are on the training quality. Look at all my YouTube videos and you can see for yourself a preview of the professionalism. I wanted to thank all of you who are members. Anyway, those are the type of charts. Clovis Oncology had been hot lately. We didn't do good with it on Friday. Overall, it's been a good breakout chart for us. Others like UWTI, Sept Pharmaceuticals, Twitter had been good. GoPro was one of my swing trading alerts all last the Thursday and Friday sessions, and GoPros continued to shoot on up to new highs. Really good to have all of you on board as Trading the Open live room members. So anyway, you can join for a trial for just 27 bucks. So anyway, let's move on and take a look at the S&P. The key decision line here is up at the 50 simple moving average right near 2170, and you can see that's been the middle of a congestion zone the last couple of months, and the S&P has recently recovered that level just this past week. We've gotten some buyers in the house, and if you look at the daily chart in the S&P, we're right in between or pivoted off of the major 100 simple moving average line, which I told you last week was a strong possibility. We'll find support at the 100 simple moving average and resistance at the 50 SMA. So we'll see where it heads. For our upcoming week ahead, let's use 2182, just a breakout above previous highs right there as our R1 value. So we can go long starting at 2182, and our S1 is going to be 2155, and I'm making that relatively tight. We don't have to wait for it to get down here. The reason is the markets have been so volatile, we want to capitalize on either upside or downside volatility. So looking for moves outside the immediate trading ranges in the strongest possible stock and ETF and futures and options plays out there makes sense. So we were in a high volatility time. The VIX is up just a bit. What did we close off at yesterday? The VIX was up 2% yesterday. So we're starting to see a pivot in the VIX. We had a big move up in the VIX earlier during the market sell-off. We're finding support. It's starting to pivot. So it'll be interesting to see which way that heads in the upcoming week ahead as well. Anyway, let's get on with it with our swing trading charts. Last week I told you XL, this chart, EXEL. Echo X-ray, Echo Lima would be a good chart. So last week's broadcast episode, I told you that would be a good breakout trigger. Very successful if you took that. So congratulations to all of my traders around the world who listened to my tip about XL being a good long in last Saturday's broadcast. Continues to look good for the next week ahead, right? It's still in an uptrend. I don't see any technical problems with that. It's a nice 45-degree angle, gap continuation, momentum runner, and a nice tight channel running up 45-degree angle after minor gap. So that was why I called it long for you guys last weekend, and it continues to run on up to new highs. So EXEL, first up to bat. Next up, I said CRY would be good, and it did break out to new highs, and although it pulled back a little bit Friday, still makes sense to look at for a new breakout if it's able to continue its uptrend continuation. So CRY, not crying boo-hoo, but CRY, the stock makes sense because it's gone from 16 to just under 19. So nice, nearly 3-point run. Makes sense to look for a breakout in that one as well. Next up, a couple of new ones. AES. I'm starting to cover some of these less expensive stocks for a reason. There's a lot of you who may not have large trading accounts, but you still want to be in the market. So I'm expanding the coverage strategically in the organization to start now adding very exceptional, the very strongest charts. The problem with people who trade cheap charts is they trade a lot of choppy, cheap charts and get in trouble. So we're going to start adding some of the inexpensive charts like this one, but only the very strongest ones with sustainable trends. See, a lot of the penny stock traders and all that, they try and jump on a momentum runner at 9:32 in the morning. It runs up all of 3 or 4 minutes and then collapses right back down again like a video game trying to shoot off a trade, and they get wiped out. And we don't want to do that. What we want for you is trades that are likely to continue on up with sustainable, long-term, consistent volatility to the upside, right? That's how you make it as a trader. That's why I called XL for you guys last week, right? How much could you have made if you listened to me last Saturday? Do the math. And again, thanks to all of you. We're up at 4145 registered. Our next one up at bat is Twitter. That's a good technical term. A schwang. I'm just kidding. Gotta have some fun with this. Bada boom. This is an ascending triangle following a bullish engulfing breakout yesterday. Okay, so it's a bullish engulfment here. It started the day in a gap down. Anyway, that's worth keeping on the radar for the next week ahead because some good news. It's likely to gap up on Monday. So we want to wait until after the gap continues if it does. Okay, what's going on with our other broad markets? If you look at our E-minis, my long call last week was good for y'all. If you took it, that is our, let's look at the ES 3-day chart here. For you futures contracts traders, we're in a downtrend the last 2 days, right? It gapped up, but then kind of parabolic arc, and it lost support right under the 2162, right? And see, the lower Bollinger Band has not really been broken through significantly. In fact, the upper break is larger with that bearish upper shadow than the lower pivot down there. So it's still a downtrend bias instrument. And so from a momentum standpoint, our S1 trigger is 2146, reading off my notes. Always, in case you're curious what I'm looking at, I always make notes each week of my S&P levels, the E-mini levels, and the top Forex pair to look at. And then in my trading week ahead portfolio box, I put the top swing trading picks over there. And then I also have the day trading picks for you guys as well. Anyway, 2146 is S1 on the ES next week. And the reason for that is I wanted to lose this bullish cup resistance down here, so we'll see if it drops. R1 is going to be 2168. And the reason for that is it's right above that Bollinger Band peak. So that would be the earliest long would be here. Secondary long over the 2174. That would be a stronger long, but the first place, if you're a day trader, would be over the 2166. So we'll see what the minis do next week for those of you who trade that instrument. And what else do we have here for you? All kinds of goodies here to see what's hot, what's not, how to trade it, and how to make a sensible professional trading strategy. The best of the currency charts right now is the dollar CAD, right? It did a nice spike up on the 23rd, and we can see if it continues to get new volatility. Kind of an inverse head and shoulder type of sentiment there, and a left shoulder, choppy big head, and probably joking there somewhere, and then a right shoulder there. Took out new highs. It's back into the congestion zone, so it's not exciting yet, but if it does continue up, the US dollar to the Canadian dollar, looks like a upside long play. I'm not excited about this till it takes out new highs over the 1326, but with that start of a momentum, kind of we got out and pushed up, we may see if that pair gets new highs as well. All right, now let's take a look at, back to our stock charts, what's in play. One of the things I want you to pay attention to are these charts. If we can pick a couple of these, like Twilio, Clovis, First Solar. First Solar yesterday I said to go long 3560, right? And that's, I always use a 2-day 1-minute chart. That was my long call for FSLR. I was running the live room on bonus Friday days yesterday, 3560, and the other call was, I'm trying to read my notes here, 36, right over 36. So where was it? The main point is, and I posted these before the market opened, the next long was 3620, so my traders capitalized on that. First long there, and I got everybody out right on this first sign of a pullback. We didn't ride it all the way to the high, we just got in long there, long at a 2-day high, and then sell there. And that's a perfect example of the type of day trading chart that we like at Trading the Open. For 16 years now, I've trained thousands of traders worldwide how to day trade opening range breakouts and gap continuations. I'm widely imitated, never duplicated. These are the kind of rock star calls my members get at Trading the Open. So that was a good example of a first long, a second long, and a sell in yesterday's session. So really excited to see so many new members at Trading the Open as they get tired of these pop and drop penny stock BS charts that don't go anywhere. We want charts like this where you can get in early or late and still come out smelling like a rose and doing well with the winning trade setup. So that's the type of chart you want to focus on, one that has a sustainable open range breakout length of at least 50 to 80 cents, and your goal is to get at least 40 or 50 cents out of the open range move. We hit it out of the park with a over 1 point win from the first call and a good 40 center from the second. So anyway, that's the type of chart as a day trader you're going to focus your energy on. TWLO is another good example of one that does have legs. You know, you're looking for things like cup pattern breakouts, right? I always teach traders how to do these classic bullish cup, wait a little bit above the high in case it's a false breakout, and then jump on board and get a good breakout momentum runner, and then get out at the first sign of trouble, right? And those are the type of charts that make better sense to day trade, or those that that actually has some juice or some volatility. Or Clovis Oncology back on this day, we got inverse. Remember this one, it was an inverse head and shoulders, broke out to a bullish cup new high. It's all about patterns. The key is you need to use patterns with high volume, high volatility instruments, and those are hard to find. Oftentimes you'll see high volume tier 1 sector leads like Intel or Microsoft or Apple or Amazon. Those aren't worth day trading because they chop around. What you want is high volume with high volatility instruments, so liquidity is easy to get into. So you're not being faked out by high frequency trading algos or market maker traps. They can't do that kind of BS that you see in penny stocks when the volume's so high, right? If our volume is 20, 30, 40,000 shares a minute, that's too much buying pressure for somebody to manipulate, unless they're a huge hedge fund trader trying to trade billions of dollars. They don't fool around with these kind of charts. So we like to hit and run with these good breakouts. Charts like Twitter are definitely going to make sense for day trading next week as well because of the volatility. So we'll see if that also gets some new buying pressure in our upcoming week ahead. So got just a few minutes left here as we take a look at our S&P, just put it in context here, just a reminder, we did get a lift up off the 100 SMA resistance at the 50 moving average line. The market wants to know, are we going to drop back down into this range? Are we going to stall here and drop? Are we going to chop sideways? Most of you who voted said sideways chop, and I agree with you. We're not at new highs and we haven't lost support. So by definition, our strategic trading plan should be to expect choppiness and uncertainty next week. So what you have to do as a strategic countermeasure to intelligently capitalize on volatile breakouts is only trade the strongest breakout exceptional charts, the gap continuations, the multi-day high breakouts, the charts that actually have a sensible, strategic, step-by-step, most likely to work out trading setup ahead of them. So we're looking for the patterns that are likely to work despite kind of an uncertain, choppy market. So that's, as usual, that's what I specialize in. I always like to handpick out the best charts, like my calls for you guys in Excel last week. I told you CRWY would be a good chart, right? Do the math. How much money could you have made if you listen to my long calls in that instrument or this instrument? You know, if you're going to trade cheap charts that are under 20 bucks a share, they ought to go a little something like this, right? It doubled from, well, almost doubled from 8 to 15. That's a monster chart. You could have thrown darts at it and come out. It'd be hard to lose money on that chart. That's kind of a parting thought. You want to trade charts that are so undeniably, so unquestionably strong that it's very hard to lose money in them. You want to set the odds in your favor. You always want to trade. I'm an odds-based guy. I'm always trading the odds. And so I'm looking at whatever I've got an edge at trading. So it's relatively easy and simple to do well with a chart like this. You know, watch soon for all my competitors out there saying, oh, look at this chart here. Yeah, well, they're morons. What you want to do is learn from a guy like me who's a real trader, plus picks great charts, plus has tight risk management. That's kind of the trifecta of how to make it. Learn from educators who prove they trade with the strongest charts with the tightest stops. That makes sense. 3 criteria. Number 1, educator must have P&L proof they're a real trader. Otherwise, they're just morons talking about charts, which is what most of this industry is. Number 2, strongest possible charts with the strongest 45-degree angle sustainable breakouts. Number 2. And number 3, although it's the most important, is very tight risk management and a position sizing or scaling strategy where you build a trade. So if you get in on a first breakout, you don't just sit on your hands and say, I'm in the money, that's nice. You figure out where is a likely secondary long trigger to snowball into your trades. My biggest winning trades that I've made the most money in, I've traded millions of dollars worth of stocks and ETFs over the years, and Forex and E-minis, test them out and see what works. What I have found in my own trading is my biggest money trades are those that I've built over time. So instead of 300 or 500 shares, I might start off small with a 100-share trade, but I'll build it every few days for a swing trade, so it matures over time. Develop a trading process or a plan where you can strategically add to winning trades every few days if you're a swing trader. Now for day trading, you can usually only add once. You can't build the trade over time because you got maybe 15-20 minutes for the life cycle of the trade. But for swing trades or longer term swings or kind of shorter term position trades, your goal absolutely has to be to add to winning trades. And you can't do that with choppy charts. It's not going to work. And it's a lot more about the math than it is the chart patterns. Let's see what's going on. Again, the S&P, I guess a parting thought, I got to do swing scans now. So many new members in swing scans. I wanted to welcome everybody aboard. It's really exciting to see it grow. Always look for trading decision support within major moving averages as well as the obvious chart pattern resistance. Trading ranges are here and there and up here. So look to make a decision or a trading plan based on breakouts above the institutional moving averages or pivots off of them. The 50, the 100, and the 200 SMAs. We're still in an uptrend continuation. It's still overall a long bias market, though we did a pullback and a pivot, a bullish engulfment right here. We'll see if this pivot gets legs and continues on up or if it chops sideways. But develop a trading plan that serves you well and raise your standards. Say to yourself, never again am I going to take big stops. Never again am I going to learn from some educator and trust these morons that don't prove they trade, which is a lot of them, which is most of them. There are, fortunately, more of us now showing P&L proof we really trade. That's important. Say, never again am I going to trade cheap, choppy charts that junk around and aren't going to make me money. Only focus on the best charts the brightest educators with Proof We Trade, and very, very tight risk management is the underlying theme of everything you do as a trader. Because you trade like a business, right? You're trying to minimize your expenses and maximize your profits and your net income as a trader. And if you want to build your net income as a trader, speaking from experience, you always have to add to winning trades and always have to subtract from losing trades, and make sure you do that sooner rather than later. All right, so with that, thanks. Y'all have been amazing. I appreciate it. This is the end of another episode. So until next time, y'all take care, and I will see you in our upcoming Saturday. Trade smart out there. Trade the best charts only. Focus on good instruments that actually have a shot, or outlier gappers that do something exciting, and have a good, smart approach. I'd appreciate it if y'all would tell a friend. It's certainly great to see a big, epic turnout. You can try my various alert services. You know where to find me. So take care, and best wishes for success in your trading during our upcoming week ahead. Get out there and make some money, all right? Bye-bye.